So I think a Sunday brief is well and truly in order, given what we're lining up for here with the futures tonight. Of course, Trump setting down in Malaysia and already telling us that things are moving along nicely for a trade deal with China. This whole thing is just so ridiculous. I mean, it's the 10th of November is the deadline. We all know what happened the other day when the futures sold off 7% on the lows, and then we've walked it all back, and it's very tiring, and quite frankly, it's a sideshow. The fact that the markets are buying it again on the weekend, and we'll see what happens tonight, but it's just so ridiculous, quite frankly. What matters this week is the earnings, and the way that the world works these days is that these are the only earnings that matter, given the sheer size of these companies that we're talking about, and the fact that their capex guides for AI are quite literally macro pillars of this market. So Wednesday night, we have Microsoft and we have Meta and Google, and then of course that's followed by Apple and Amazon on Thursday night. Now that is essentially the be all and end all. Once we've got through all five of those, Nvidia is on the 19th of November, and Broadcom, which is most definitely part of the equation, it's the same size as Meta now, and should be Mag8 is a redundant acronym, is on the 12th of December. But this week, those five are going to be the bulk of our big tech, big AI capex guides, and we'll know where we stand pretty much. So we're going into the week at all-time highs once again. Google, of course, with the latest quantum push on Friday, leading the market, and that's fine. It's not. I don't mind Google leading the market. It's high quality, and it makes sense, right? Like, what bothers me is when all these companies that have zero revenue are leading the market. Nonetheless, that's all cooling down, so it's quite healthy. But Nasdaq is definitely getting into the overbought territory again. So my QQQ short, for those of you who watch me, has been painful, but the longs have done their job. The book is up a bit. I would prefer it to be up more, but it's a very tricky moment in the markets now. So risk management, hedging is front and center. I'll probably reduce that hedge as we go into the numbers on Wednesday. No doubt there'll be a dip, and then we'll see how we get through. I don't like to take too much risk through earnings. It's a noisy minefield, and it's not a time for conviction. I don't like playing earnings full stop. I prefer to just sit it out and be hedged and just pick off things on the side. So we'll see. Anyway, all the best.